Hello and welcome back to Market Vibes by CA Sri Lanka. I am Oshudha Divasgunasekara and I will be taking you through some of the key economic developments that we saw in April 2025. Looking at inflation, the deflationary conditions we've seen over the past few months continue to persist in April 2025. Deflation measured by the Colombo Consumer Price Index was recorded at 2% on a year-on-year basis in April 2025. The recent fuel price reductions are likely to allow inflation levels to remain lower over the next few months, but an electricity tariff hike is expected in June 2025, which could push inflation levels higher. However, inflation is likely to remain manageable and converge towards the target level of the Central Bank of Sri Lanka's 5% by end 2025. Looking at market interest rates, the interest rates remained quite stable over the month of April and have remained stable since the end of the month as well, with the average weighted prime lending rate being recorded at 8.39% as at the end of April 2025. The average weighted deposit rate was recorded at 7.15% and the 12-month T-bill rate was recorded at 8.3% during the same period. Credit to the private sector continued to improve on a year-on-year basis, where we saw 14% growth in March 2025, and the private sector credit provided to the private sector grew to 8.43 trillion rupees. The month-on-month growth compared to February was 2%. With credit demand now picking up, interest rates could start to gradually move up. The exchange rate witnessed a 1% depreciation in April 2025 against the US dollar. The indicative rate published by the Central Bank of Sri Lanka closed at 299.62 rupees to the US dollar on 30th April 2025. Since the end of the month, the LKR has remained broadly stable so far in May 2025. Looking at the gross official reserve position, Sri Lanka's reserve position recorded a 3% decline in April 2025 compared to the previous month, and the reserve position was recorded at $6.3 billion as of the end of April 2025. Looking at external trade, Sri Lanka's export earnings improved by 8% on a year-on-year basis to $1.2 billion in March 2025. Primarily due to industrial exports increasing by 6% and agricultural exports increasing by 17% on a year-on-year basis. During the month, the textile and garments exports saw a 12% growth on a year-on-year basis, whilst the tea exports increased by 11%. Meanwhile, the imports increased by 8.6% to $1.6 billion in March 2025 on a year-on-year basis. This was mainly due to consumer goods increasing by 35% on a year-on-year basis, whilst intermediate good imports increased 39%, with investment goods actually reporting a decline of 5%. The trade account deficit expanded by 10% on a year-on-year basis to $396 million in March 2025. Earnings from net services improved by 5% in March, primarily due to the improved tourism levels. Looking at tourist arrival numbers more closely, during April 2025, we saw a 17% year-on-year growth in the number of persons arriving in the country, and the final number for April was recorded at 174,608 persons. We are now in the off-peak season for tourism in Sri Lanka, with daily arrival numbers now dropping to about 5,820 persons per day in April 2025, and this may reduce slightly as we move on to the month of May as well. Looking at capital markets, the Colombo Stock Exchange experienced a significant downturn at the beginning of April due to the sentiment hit that came through with the announcement of US reciprocal tariffs on April 2nd. However, the market rebounded in the latter half of the month, recovering most of the earlier losses. Accordingly, by the end of the month, the all-share price index was broadly unchanged month on month, whilst the more liquid S&P SL20 index decreased by 2% on a month-on-month basis. And with that, we will conclude this month's Market Vibes session. Thank you very much.